The United States war on Iran. Let's get some fresh insight by turning to Jason Matthews of Matthews Financial here in Oakland. We'll discuss the impact on the markets and the oil industry, our investments in a minute. But first, let's talk about the change we're already seeing at the gas pump. I think my cheap gas jumped by 10 cents over the weekend.
Yes, indeed. So what we're already seeing, because 20% of the oil comes from the canal right there in Iran, that oil prices already jumped, and we're going to start seeing even more when we go to the gas station and other things as well. So get ready for it in the next couple days.
Okay, we're already seeing it. I'm guessing longer lines today. How long do you think? We saw the president lay out a timeline of 4 to 5 weeks. The defense secretary wouldn't firm that up. How long should we be prepared for this unrest?
I would say, yeah, great question. So far as oil and gas prices, when we go to the gas station, those are usually going to be ladder effect. It doesn't happen immediately. We did see that 10 cent jump, but we think they're going to possibly happen even more because it's a lagging indicator. So we're going to see it not for 4 or 5 weeks. It could be 8 weeks, 2 or 3 months. So that's the issue we're going to have. It's not just no overnight thing. This is a long-term thing.
Got it. What about the impact on natural gas?
Oh, natural gas is the same way. So natural gas is going to be the same way. So get ready for higher PG&E prices when you use your natural gas as well.
Okay, let's talk about what effect does this war have on President Trump's overall economic policy?
So right now what we're seeing is this, and especially let's talk for that is one, this could cause more inflation. So we're hearing upward inflation because of cost of energy prices, which cost more for transportation costs, for shipping goods and containers. So we're going to see this as making the market and our economy a lot more volatile right now.
Okay, so what about interest rates then?
Interest rates could jump up if we have this inflation, right? So we could see that. So I don't think the decrease of interest rates that we were thinking about initially might see the opposite now, where we might see increases with the roaring of inflation because of this.
So maybe rushes the timeline a little bit.
Yes.
Okay, are we right around 6 for 30-year mortgage rates right now?
Right around 6, correct.
Okay, and that was sort of a somewhat fresh low that we hit last week. Do you expect to see that creep up?
We could definitely see that creeping up. We do see fixed income rates, bond rates, which it impacts your mortgage rates, might slowly start creeping up.
A lot of people calling their lenders, talking about a refi today, probably.
Refis and HELOCs.
Okay, refi and HELOC, we'll jump on that. Let's just talk about uncertainty overall. I don't like it. I know the markets don't like it. How do you see the people you work with react to what's happening in the news?
Right. So I think a lot of our people, especially as they're getting ready for retirement or in retirement, they're seeing how this is going to affect their portfolio. There's some winners and losers right now because of it. So today we're seeing energy and defense stocks have been roaring and having a great day, while we see other things that are getting hit drastically because of this. So I think that's where the importance when you're looking at your plan is looking at your overall portfolio and having diversification and not just having that one hot stock or not. This is, with all this volatility, this is going to definitely impact how you look at your portfolio, but it's the plan overall for the long term we should be looking at, not just for the short term.
So planning is better than reactionary, as in, wow, I bet you oil and gas is going to jump, let's buy that today.
Exactly. You might be too late to jump in the game, right? And so that's what often happens. We get so excited we jump in things instead of looking at how this is going to impact me long term.
So let's say I am very close to retirement and I do have a couple buys that are really sinking my overall portfolio. You can't get rid of those losers because then you've realized the loss, right?
Maybe, right? And so this is where you actually have to have a plan and talk to your advisor. Maybe this might be a time to do some tax loss harvesting. So if you have gains on some of your stocks and you have these losses, it might be a great tax planning mechanism to do. So this might be a time where you might want to do that. But that's where you have to rebalance your portfolio and see where those opportunities are. Do you keep it? And that's where the plan comes into place.
Do you foresee a little bit of belt tightening overall?
I definitely do, right? With gas prices going up, people go like, should I take that trip as we're starting to think about the summer? Should I take that trip? How much are our flights going to cost? Should I maybe do a little staycation as well? And I think people are really going to consider that. All
right. Well, we had a whole other topic to talk about this morning, and we pivoted as soon as we woke up to this continued news. I appreciate your joining us in studio and talking about this emerging topic. Jason Matthews, it's always good to have you.
Good. Thank you.
All right. Coming up, we'll be right back with you.